So right there, and then some frequently asked questions for those who constantly come on here and wondering, do I go over repairs and so on and so forth. So all of that is updated. All right. Nigeria, welcome. Orlando, welcome. Vegas in the house. Barbados in the house. Yes, and then you can just go to favorites. So now anytime people want to know breakdown of flags and how to enter, and it's right at the beginning of the session. I cover it in detail so you can watch it, right? And then Renko's training part 1, that was on Sunday, and then tonight is part 2. All right. Happy Tuesday from Dallas. What's going on, man? Memphis in the house. There we go, there we go. So, you know, little progress. All right, let's get into it. Southside Chicago's in the house. Welcome, welcome, welcome. Welcome, welcome, welcome. Thank you for joining. All right. So let's get right into it. Right. So quick recap. Right. Renko's. So Renko's differentiates from candlesticks. Right. The biggest difference is the noise. Renko's takes away a lot of the noise. And what do I mean by noise is that candlesticks, you know, it factors in time. So basically, depending on the time frame that you're trading on, you know, every new day will form a new candlestick. If I go on the 4-hour, every new 4-hour will form a new candlestick. So on and so forth. All right. Candlesticks also factors in news. It also factors in the volume, the size of the candle, all that stuff. Renko's doesn't do any of that. It takes away all of that noise and just focus on price. So when I switch over to Renko's, it's just price, right? So right here, and I don't know if I covered this on Sunday, probably didn't, but box size alignment method, right? So the ATR length, so 14. So what does that mean? So basically, price has to move $14, right? At least 14, right? $14 in pips, right? In order for a new brick to form, all right? In order for a new brick to form. Some people adjust it. I don't adjust it. Again, I don't modify anything. I leave it the way it is. You can do that by double clicking. So if you want a certain length, you can put, you know, 50, 100. Some people, you know, whichever one they want. But to me, 14 is enough. I don't need to modify that. And again, it's basically equivalent to the next brick. And then to the next brick. And then to the next brick. And so on and so forth. Right? It's a lot cleaner to look at when you look at the trends, where the price is going on an uptrend, downtrend, easier. And then most importantly, if you notice, these bricks, unlike candlesticks, they don't have wicks all over the place. So candlesticks has wicks on every single candle. For a majority of the candles, on Renko's, only some. Right? If anything, it's the opposite. Majority of the bricks don't have wicks. Right? So I like to look at Renko's because it's easier to understand where price is overall going. All right? Where price is overall going. All right? So when you're able to get the overall trend, so we see this, basically price has been on this downtrend. It's easier to be in a sell. Why? Because we know that overall trend, we're in the downtrend, we're in the sell. Like I said, when it comes to the time frames, the 3 time frames you guys should always be paying attention to, the 3 major time frames, daily, weekly, monthly. As long as you guys always outline those 3 time frames, you'll always know where the market is. You will not be lost. All right? You will not be lost. Okay? Now, you don't want to just trade Renko's by itself. All right? You can. You absolutely can. Right? You can absolutely trade Renko's by itself. But it does help when you factor in other things. Right? Just like you use confluence when you're trading candlesticks, you'll use other indicators and other confirmation tools. You want to apply those same methods with Renko's. So my method doesn't change when I switch over to Renko's, right? Actually, it works just as good, if not even better. All right. I still see my reversal patterns, right? I can still identify ascending, descending channels. right? I see my M's and W's a lot clearer, right? So nice, what, double bottom over here, right? Got your double tops. So you see your pattern is actually a lot better on Renkos. All right. So if you apply the same rules, you'll actually get a better result. Like a lot of people, like I said, on my team, they trade on Renkos and they find a lot more success trading this way. All right. So the only thing you really need, and you can do whichever one you want, right? Some people like the RSI. We don't talk about the RSI or stochastic or anything else. Some people like this. It helps them out. And it's okay. Right? It's okay. So as you guys can see, you know, when price is overbought. So let's take this for example. Let's take this area right here. Right? If I go back to candlesticks. Right? I go back to that same area there. Go back to candlesticks. You see how it's not a right away drop like how it was on Renko's? Let me split the screen. You guys can have both charts in front of you. All right. Let this load up. So right here, when this loads up, load up, load up, load up. I want you guys to see this. When this loads up, the areas, right, they're not the same, right? Like I said, candlesticks, the only thing you have to worry about with candlesticks is, again, they will prematurely have you jumping in a little bit earlier than expected. Because Renko's focus is on pure price, right? You're not going to be in and out the market as much. Scroll over here, right? So take the same area. So look. Before you actually got this drop here, let me take this off. It's not coming up. Before you actually got this drop here, right? So you would have came up, you would have sold, price would have came back before actually dropping. If we look at the same area in Renko's, right? Look at how it takes all those candlesticks and it boxes in price. Right? You don't have 1,000 bricks sitting there in one spot before it actually dropped. Price went up, hit overbought territory, right? And then boom. And what was a good sign, you had that brick with a wick. So you could have got in on your next entry there, stop loss right above it, and then boom. And look, every single time, for those who like using the RSI, so every single time, boom. Had that, had your overbought, right? Now, price didn't drop heavy, right? Let's tackle this, tackle this. Let's tackle this. Tackle this. Now, as you can see, this wasn't a big uptrend right here, right? About only 40 pips. But it's a lot better than when you're on candlesticks. Because if I go to candlesticks and just try to trade off of those overbought, oversold conditions, right? Now, if I go on back to candlesticks and I trade on those same overbought, oversold conditions, look what candlesticks will have me do. Right? Now notice, you only had one overbought with Renko's over here, right? Notice that. Overbought, overbought, right? Overbought, overbought. Not one time did price go into oversold territory. Not one time on the 1 hour time frame. Not one time. Watch when I switch over to candlesticks. When I switch over to candlesticks, boom. It would have had me right here. So this is technically a fake signal, right? Yeah, price shot up. But remember, when's the best time to use RSI? Anybody remember? I talked about this a while ago. When's the best time to use RSI? Anybody recall? Best time to use RSI. An RSI, a stochastic. No, consolidation, not in a trending market. In consolidation. That's right, consolidation. Right? So this just happened to line up perfectly. So what happens when I'm in a trend? What happens when I'm actually in a trend? So this is a trend, for example. So let me find an actual trend. Let's see here. Actually, what was trending? Let's go to Euro New Zealand. So for example, right? And this is the problem with most people when they have with RSI. So the worst time to use RSI is when the market's in a trend, right? So you see here, this downtrend, right? If you would have bought here, you would have lost, right? Price went up a little bit, but overall it dropped. You would have caught this bought, but then again, overall we're in a sell. So I want to find a perfect example. See that? You would have bought here. You would have probably bought here. All right, you would have bought here. All right, and then that's finally when price went up. And then same thing. You would have sold here. That would have been a loss. You would have sold here. That would have been a loss. Right? So the worst time to factor in an RSI is when the market is in a trend. Right? The best time to use it is actually when it's in consolidation. Now look what happens when I switch over to Renko's. Look at all those places, right? And that was on the 4 hour. Look at all those places it was telling me to buy and sell, buy and sell, buy and sell, buy and sell, right? And this is what Renko's does. Renko's gets rid of the noise. Look at that. One time it told me to sell, right? Because again, Renko's focuses purely on price. One time. Look how many times on that 4 hour time frame I had to buy and sell, and then one time, just one time on Renko, it told me to sell. One time on Renko, it told me to buy, right? So I had a deep overbought over here, right? And over here, right? Look at the gap between the amount of times Renko tells you to buy and sell, and then candlestick tells you to buy and sell. Right? Look at the amount of times. Right? We saw it here. You're buying and selling, you're buying and selling, you're buying and selling, you're buying and selling. Because candlesticks has so much noise on it. So when you're trading on Renko's, when you're really about to get in for that buy or that sell, a good over 80-90%, I would say well over 80% of the time, when it's telling you to buy or sell, that buy or sell is really coming up. So you're getting full clarity, all right? You're getting full clarity. So today, what we want to focus on is how we would enter and take trades utilizing Renkos, right? Let's say we see a setup and we're looking to trade. We want to jump in the market, right? Where we would enter, where we would place our stop losses. And as you guys can already see, why it's already beneficial to trade on Renkos, because look, not as many noise. Look at this, 3 times. Basically, and really you want to probably would consider this 1 time, but we'll do twice, right? Because technically it had you probably prematurely overbuying a little soon here. But then the real move happened here. And then 1 time selling there, right? This didn't reach the oversold territory, just came short of it, right? Remember, when you're using the RSI, you want price to really be overbought, oversold, right? Just like over here. Even when it told you to sell, right? You got a little bit of that downtrend, right? Price came back up and then boom. So today we're going to cover how would we know when exactly to get into that trade, all right? And then after that, once we go over this lesson, then we'll get into the charts and the markups for the rest of the week. I see some very good trade setups. I see that Euro JPY is starting that uptrend that I was looking for. I like Euro USD, Euro Swiss franc, but we'll get into that. But first things first, let's cover the rest of this training, show you guys how I would take trades and how you can implement and take trades using Renkos. All right. So let's stay on this for a second, since we're already on this, right? Now, again, Renkos is not much different than candlesticks, right? You can still draw your trend lines, right? If this is an uptrend, I'm drawing from the low all the way across till price breaks. That's my downtrend, right? So I can still do those same things here, right? So what I like to do when I'm trading Renkos, and what's really cool is it's a lot easier to see your support and resistance, your supply and demand zones, right? Your big uptrends, your big downtrends, right? Like right there, like right around here. So boom. So if you guys remember, right, this was back in October. Let's use this as an example. We got this move in October. We got a strong resistance up here, right? And then for those who like to do support and resistance everywhere, you can do that. I don't like to do that. I just like to cover the main areas, the institutional levels, right? The big supply and demand levels. And you can always tell by the size of the move, right? Like this is a sizable move. Look at that big move to the upside. So if price ever gets down here, this is a key level I would look to buy, right? This would be a nice level I would definitely look to sell, which most likely price will come up to, right? Based on Renkos here, there's a good chance price will come back up to, and then I'm looking to sell right here, right? So let's use this as an example, all right? Price came all the way up here and then dropped. Now, am I automatically selling once price gets up there? No, right? Same thing. On candlesticks, what am I looking for? When price hits a key level, what am I looking for on candlesticks? Right? Somebody talk to me. What am I looking for on candlesticks? Right? What am I looking for on candlesticks when I'm in a key level? You guys should notice. Right? Exactly. Engulfing. I'm looking for engulfing. I'm looking for what else? Yeah, wicks, engulfing. What else? MACD crossover is part of my confirmation. I'm not just waiting for a MACD crossover. You see? A reversal pattern. Thank you. I'm looking for an engulfing candlestick or reversal pattern. One of those two things, letting me know that this is about to go. You see? So everybody who's saying other things like MACD, wicks, yes, that happens, right? I'm looking for impulse. I'm looking for signs that price is about to turn, right? So that's for candlesticks. So for Renkos here, what I'm looking for is I'm looking for the same type of signs that got the reversal here. I'm looking for that over here, right? So let's mark this up. So same thing. Want to go down? Boom. Now, here's the thing. With Renkos, unlike candlesticks, you don't have to go down like 2 time frames. You don't really have to. You can. You can go down to 1, right? 1 or 2. But because Renkos is so powerful, so strong, you really only have to go down 1. But you can't come down 2, right? You can't come down 2. Now, this is me coming down 2. I was on the daily. Now I came down all the way to 1 hour. I could have done it on the 4 hour. It's come down to the 1 hour. Now, what I'm looking for is I'm looking for bricks with a wick. When price gets to key levels, all right, easy, brick with a wick, right? Right, that's the model. Brick with a wick. Right there. I'm looking for a brick with a wick. You see that? Why? Because bricks with a wicks are not common. They are not common. Right? So I'm at a key level in the market. Right? Key, resistance, supply zone. Right there, and I'm looking for a brick with a wick. So boom, I got it. That brick with a wick right there. Everybody see that? That brick with a wick. Boom. Perfect. Now, I can initially, right? Let's say I was using the RSI. This would be a good area to sell. Right? It lines up. I got double confirmations. I got a brick with a wick. This is a good indicator as to why I should jump in a trade. I got a brick with a wick. Perfect. Right? So now my entry would be on the next brick, and my stop loss is above where? Above the wick. Above the wick. Now, remember, we talked about this on Sunday. If I place a stop loss above the brick with a wick here, I'm looking at a 40. I'm looking at about a 70 pip stop loss. Now, I really don't want a 70 pip stop loss, right? Like some people do it. Me personally, I don't like it, right? I'm looking around 65, 70 pip stop loss. That's too big. For me, honestly, that's too big. I want to minimize it. I don't like to go really above 30 pips. 30 pips is like my max. So what can I do here? We learned this on Sunday. What is my alternative for getting a tighter stop loss? What is my alternative for getting a tighter stop loss? We talked about this lower time frame. There we go. Lower time frame. Good job. So what I like to do is I like to jump down to either the 15-minute or the 5-minute. Those are my comfort zones. Those are the time frames I like to 15-minute or 5-minute. I don't really go down to the 1-minute, 3-minute, 15-minute or the 5-minute. All right. So when I want to reduce my stop loss, I go down to a smaller time frame. All right. I go down to a smaller time frame. Scroll back. And what am I doing on the smaller time frame? Right? What am I looking for on the smaller time frame? What's my goal? What am I trying to accomplish on the smaller time frame? Right? Yes, tighter stop loss, but how? Somebody explain to me how. Yes, set it above the brick with a wick on a smaller time frame. There you guys go. Perfect. You guys remember. So if my entry, right, was based off of here, now at one or two of these time frames, so if I'm entering here based on the 1 hour, right? If I'm based off of here, so now let's say, for example, I come down to a 15-minute time frame or whatever time frame, and I don't happen to see a brick with a wick, right? I don't happen to see a brick with a wick. What I like to do is I just like to go right above the last 1 or 2 bricks, right? The last 1 or 2 bricks. And again, I mostly like to stay below 30 pips. So my stop loss, if my entry is right around here, right? My 2 bricks would be right around there. So I'm looking at a 29 pip stop loss, right? If I go down to the 5-minute, just to prove my point, just to show you guys, I will find that brick with a wick. So let me show you guys that. And then I'll write out the rules so you guys know. All right. And we're scrolling, and we're scrolling, and we're scrolling. I gotta stop scrolling. I gotta find, there's a key. Somebody know the date? I think it's somewhere on right click. I'll figure it out. How to like zoom into the exact date. So I don't have to do this scrolling back. Alright, a lot of scrolling. There we go. So I'm on this 5-minute, right? So I didn't get it here. So what I like to do is, my rule is, when I go on the smaller time frame, reduce stop loss, right? Go to smaller time frame. I prefer, preferably, 15-minute or 5-minute, and look for a brick with a wick. To place your stop loss above it, right? So in case I don't find it, let's say in this rare case I don't find it, so like I said, it'll always be on one of these time frames. If it's not on the 5-minute, I'm pretty sure I go on the 10-minute, or I wouldn't have to go on the 3-minute, but rare case, I'll find a brick with a wick. There's always a brick with a wick, especially the lower the time frames you go, the more frequent they'll be. The bricks with a wicks are actually less frequent on the higher time frames. But my general rule is, I'm gonna go down to reduce my risk. Instead of having a 65, 70 pip, I'm going down to a 15-minute or 5-minute time frame. I'm gonna find right where my entry is. I'm gonna find the brick with a wick, the last brick with a wick, which will usually be probably around here, and I'm placing my stop loss above there. If I don't have a brick with a wick, all I'm gonna do is I'm going up above. So if my entry is here, see, entry based here off the 1 hour. So I'm going above 2 bricks. So that's right there. And I'm gonna end up with basically a 25 pip, no more than a 30 pip stop loss. If no brick with a wick is there, the previous 2 bricks, all right? So whether I'm buying or selling, the previous 2 bricks, whether I'm buying or selling, that's the rules. And I'm gonna leave this on here so when you guys watch the replay, you can see the notes, you see it's clearly there, and boom. That's all I'm doing on the 15 5-minute time frame. right? That's all I'm doing, right? My entry is based off the 1 hour, right? I analyzed this off the daily, right? I went down basically to the 4 hour, 1 hour for my entry. All right. I realized, okay, I got a good entry. I lined it up. I have confluence with my RSI. Okay, price is overbought. Now I'm looking to sell. Once I get in for my sell, now again, I want to keep my risk as small as possible, but still based off the 1 hour time frame. Based off the 1 hour time frame, based off my markup, right? So remember, I marked this up on 1 hour daily time frame. Yeah, so the 4 hour. So I identified this entire trend. And remember, at the end of the day, when you're marking up, you got to keep in mind, price is always going to pull back to those areas you mark up. Price is always going to pull back, no matter what. It will always pull back. So if my entry is up here, my stop loss is, my take profit will probably be somewhere around this trend line. Somewhere around this trend line. All right. Your take profit is always based on how you mark up the chart. So let's move some of these notes out so you guys can see. So if my entry's up there, I got now a 25 pip stop loss, and then my take profit is all the way near that trend line. So I'm risking 25 pips, and then my reward is 790 pips. See how that works? I identified a key level first. Support, resistance, supply, and demand zone. Okay, once price gets there. So same thing like candlesticks, how I wait for an impulse, I wait for an engulfing candlestick, right? I wait for a reversal pattern. Then, so the rules for Renkos, I'm waiting for a brick with a wick. A brick with a wick around that level. All right, boom. Once I enter the market, again, if my stop loss is more than 30 pips, I will utilize the smaller time frames to reduce the risk. And then my take profit is at the next supply and demand level, or the next trend line level, right? Based on how you marked up the chart. So run this again. I'm looking at this on the daily, right? So boom, I got this uptrend. I got a major resistance at this top right here. So when price came to this level, right? So I go down 1 or 2 time frames. I'm going to find it. I got a brick with a wick on the 4 hour right here. So that means, let's use the 4 hour. So my entry is right there, right? Once this red brick becomes solid, my entry is on the next brick forming, right? My take profit is going to be down here near this trend line, because there was the possibility of price coming back up here. In this case, price broke down, but nonetheless right here, because from this entry all the way down, again, we got about over 600 pips. You're not going to lose from that. That's a great trade, right? What I don't want is when I enter the market, when I place my stop loss above that previous wick, I don't want a 200 pip stop loss. I don't want a 200 pip stop loss. So, and realize the higher the time frame, right? Notice how when I was on the 1 hour, the stop loss was only 70 pips. Notice how I moved to the 4 hour, the stop loss is over 200, right? The higher the time frame, the bigger the stop loss is going to be, especially with a brick with a wick. So, for example, I'm on the daily. If I enter right here after this green brick with a wick is formed, and I place my stop loss below that wick, look at the stop loss, over 324 pips, right? Because that's a daily time frame. The higher the time frame, the more pips is in that brick, right? So you get the stronger confirmation, but again, I don't want a big stop loss. So this is where the smaller time frames come in handy. Now I can go down to a 30 minute, a 15 minute, those time frames, right? I want to use a smaller time frame. Like I said, preferably 15. And what I'm looking for is the last previous brick with a wick. So if I enter here, this was a 30 minute. So if I enter here, now look, on the 30-minute time frame, look, I got a brick with a wick right here. I got another one right here. I got another one right here. Main thing is my stop loss is not up here. So now instead of having a basically 200 pip stop loss, you see where it says 203? That's a 200 pip stop loss. Now, because I went down to the 30-minute and I got a brick with a wick, now my stop loss, again, 47. In this case, I would just go down to the 15-minute and just use a smaller one. Again, I want this no lower, no bigger than 30 minutes. So I got to show you guys the example. Right? And that's very, very important, because with this strategy, you guys are going to make money. I'm not worried about that. Every person who honestly uses Renkos makes money, because it's that simple, it's that easy. My thing is making sure that you guys utilize it correctly, right? So here we go. This is a better one. So you see, these were 30-minute stop losses. That was a 30-minute stop loss. See, remember, this right here is the 4-hour entry, right? So 4-hour entry. So if I'm in here, no more than here. So I'm having, my stop loss is going to be right around here. 25, no more than 30 pips. Basically right on the edge of that wick. Right? Right on that edge of that wick. Not going to be up, because remember, on the 30-minute, you had two right around here. So right here, that'll probably give you around 31. So that's not too bad. And then you still get the strong move to the downside. Think about it this way. Even just this move right here. 340 pips just on this down move right here. This clean down move right here. 340 pips. You're risking 30 pips, 31 pips in this case, for 340 pips. That's a good risk to reward. All right? Remember, the whole point of trading is to preserve your account, protect your capital, and to always maximize your rewards. And you want to be able to maximize your reward with confidence, not with fluctuation, not with emotions, with logic. Does that make sense? All right. Let me answer some questions just in case, but it makes sense. But would that affect my stop loss? All right. Got some questions. Oh, so basically what happens is, one thing with Renkos, they do sometimes repaint. So if there's a drastic movement in the market, right? So let's say this brick with a wick formed, right? Or it was starting to look bearish, and then out of nowhere, news hit, right? News came out of nowhere and just spiked up, right? So Renkos will repaint, and instead of going on that downtrend, you got that full uptrend. So that's why I said, make sure you see a valid brick, right? You never want to enter a trade when the brick is just forming, right? And that's why I honestly tell people to stay away from the lower time frames, because that's where it really happens the most. It doesn't happen a lot on the higher time frames. That doesn't happen, like the repainting. Like sometimes when you go back and you might not see it, because that doesn't happen. Because you got to understand, Renko, in a way, is an indicator itself, because it's taking all that data, all that information to process these bricks, right? And process all that new information to come in. So in the past, right, especially when you're on the smaller time frame, like I said, when something happens, like that brick with a wick might not be there. All right? So it's very important. All these things must line up. You must be you must take the trade at a strong supply or demand zone, right? You got to make sure price is overbought, oversold. So in my case, I don't use the RSI. It would be a MACD, right? I was just using that as an example. So it would be a MACD. So all these things for me have to be in alignment before I take my trade, right? So now that's why I said I'm not just relying on Renkos, right? So when I jump in on my sell, my MACD confirms for me, right? If I want, I can add in a moving average, right? Now I have multiple confluence here. My moving average confirms for me, right? Price is underneath my moving average. I got my MACD crossover. I got all these things here. So now it gives me all that extra confirmation. Because if I'm just trading on Renkos, right, and I'm just trading off of bricks with a wicks and reversals like that, then yes, I can be in trouble. That's probably one of the small downfalls of trying to trade on pure Renkos. Yes, and that's why I don't trade on those time frames. Which confirms for me, right? Price is underneath my moving average. I got my MACD crossover. I got all these things here. So now it gives me all that extra confirmation. Because if I'm just trading on Renkos, right, and I'm just trading off of bricks with a wicks and reversals like that, then yes, I can be in trouble. That's probably one of the small downfalls of trying to trade on pure Renkos. Yes, and that's why I don't trade on those time frames. That's why I don't trade on 3 minute, 5 minutes. What did I just say? I mostly, really, even on candlesticks, I don't like to go below the 1 hour. The only reason why I use the 5 minute, 15 minute is just to reduce the risk. So if I get knocked out of the trade, I know it's a legitimate loss. But I never use the 3 minute, 5 minute for my entries and everything. And that's why I've always preached that to you guys. Don't use the smaller time frames to enter the trades, right? So I will go down to the 15 minute. Yes, to reduce my stop loss. All right, guys, please, that's very important. All I'm doing with the 15 is to reduce my stop loss. That's it. I'm not using it to analyze the charts. I've already done that based on the higher time frame, right? Repainting is not going to happen frequently on a daily time frame. Do you know how much it takes to move on a daily time frame? Right? Do you know how much it takes to move on a daily time frame on Renkos? Look at this. The last 3 bricks, right? So right now, we're this entire downtrend from here to here started in October of 2018. Look at that. October of 2018 is when this downtrend began. It took basically a good October 5th to be exact. It took a total of 3 months before it got down here. That's on the daily. That's how long it takes for Renkos to produce. So you're not going to see that. So this wick right here, you'll see tomorrow. You'll see the next day. You'll see the day after. You'll see a week later. This is more reliable than the 5 minute, than the 3 minute, than the 1 minute, right? That again shows why you should not be trading on those smaller time frame. You use anything under 4 hour, anything under the daily time frame is for entries. 4 hour, 1 hour, and everything. You can still trade off those time frames, but you're not getting that strong confirmation. All right. So again, same rules, and it doesn't matter, right? Let's say I'm on GJ. So as you can see, nice clean downtrend. Right? So I got this overall downtrend. That means overall I'm on a downtrend. Right? GJ's been on a downtrend since March. Been on a downtrend, right? And if you look at right here, right, you had a big downtrend here. So that means this was a key level. Key level resistance, not support. All right. So boom. When price got up there, I'm looking for that brick with a wick. I got one. That was it. This was my only one right here. And look how it lined up perfectly, right? With your RSI. For anybody use that with my MACD. So that lets me know I'm clearly overbought, right? Remember, the time to buy on this was down here, over here, on this MACD crossover. You're not buying at the top of this MACD. You're not buying at the top of this RSI, right? Watch what happens when I switch over to candlesticks. How many times it would have told me to sell in the same area, right? So if I go to candlesticks, so look at that. You would have sold probably one. So based on RSI in this candlesticks, so you would have sold here. You would have sold here. You would have sold here. Right? This was the Renko where it was telling you, because notice where you see how on the Renko where it would have had you selling, because based on the strong, because again, Renko's only cares about price. So this was Renko's entry right here. Let's mark that up. And you would have sold here. Right? Nope, actually no. You would have sold there. That's overbought. You would have sold there. Right? So candlesticks would have had you sold, and another one over here. So that's 1, 2, 3, 4, 5. 5 times. 5 times on candlesticks. Whereas Renko's on that same 4 hour, 1 time. On that same 4 hour, 1 time. Right here. See the difference? That same 4 hour, 1 time. See that? 1 time to candlesticks, 5 times. And this is where the emotions as a trader, you'll jump in and you go crazy and you're like, man, I keep jumping in. When is the sell? When is the sell? And like most traders, because you sold here and you got taken out, you sold here, got taken out, sold here, got taken out, sold here, got taken out, sold here, and then the move finally happens. And then you guys pull out your hair and you go crazy and you're like, oh man, oh man, oh man. Right? 1 time. Key area. Now, some of you guys are looking at this. Well, Steve, price pulled down and then came back up. Yes, absolutely did. Right? You know what I would have done? Because this was my ideal area to sell based off of Renko's, based on this time frame, all I would have done was look for a re-entry in the same place. That's all I would have did. Re-entry. Price pulls back, right? Because I only got a brick with a wick 1 time over here. So if price pulls back, I'm looking for the same thing. So I don't get a brick with a wick here. I promise you I'll get it on the 1 hour. I'll get it on the 30 minute. Right? Go back to that same area there. And as you guys can see, voila. Right around this area. What did I get? A brick with a wick. And as you can see, if my stop loss would have been placed right above, Price never came back. Price never came back. And that began your big downtrend. Right? Now, mind you, when you would have entered just here, right, based on the 4 hour, look at the move you would have catched just off of this right here. Oh, why is this moving so slow? So if my entry is there on that brick, just that down move right there, 347 pips. Just on that move right there before that pulled back. Before that pulled back. Before that pulled back. 347 pips. Right? So again, you guys with this, putting all this information together, putting all this strategy together, you guys can take your trading game to a whole nother level. I mean, when I say level, I mean level. Like somebody I saw in the beginning of today's chat, you guys were talking about gold. Some people sold gold, right? Some of you guys sold gold today, right? So look at this. All right. Look at this. Let's say I'm on the, let's say I mark up my chart. So I mark up my chart. I'm on this daily uptrend. I'm on this daily uptrend. And I drop down 2 time frames. Right? I drop down 2 time frames. Right? 2 or 1. Like I said, you don't really have to drop down with the 2, but 2 or 1. Let's say I go on that 1 hour, right? So Renko. Now look at this. Got your overbought. Now here's the thing, and this is why I love my MACD so much. Me personally, I wouldn't have jumped in. I wouldn't have jumped in on the sell. Because why? My MACD shows me that I'm in a strong bullish uptrend, right? Whereas RSI, you see, and then again, remember, you're in a trend. So this is not really the best time to factor in the RSI. It's mostly when it's in consolidation. So you're in a trend. So, but even though, let's say I would have sold or you did sell, just using this as an example. Let's say you try to sell here because you got a brick with a wick, and then you place your stop loss right above, right? Now this is the 1 hour, so that would have probably been a big stop loss. So again, I would have probably went down to the 5 minute to reduce that. So let me find my entry. Unfortunately, I can't use the replay button, or else I would use the replay button and show you guys exactly how would this all play out. But trading view, from what they told me, it's a lot of work. So my entry would have been right at the bottom here, right? So if the next brick formed, I would have entered there. Now when I go to that 5 minute, just to give you an example, so if I'm entering right around here, right, I don't want my stop loss all the way up here, right? That's over 170 pips, right? Even on that. What's the rule? If I don't see a brick with a wick, what am I doing? So my entry is after the break, after this brick turns solid, my entry is here. Right? So entry here. What's the rules? If I don't see a brick with a wick, how many bricks am I trying to place my stop loss? Right? Who knows? How many? Two. That's right. If I don't see it, no more than two. So 1, 2. So my stop loss is here. My stop loss is here. Right? My stop loss is there. So now, instead of stop loss being all the way up there, about 170, 180 pip, now look at that. I got a 30 pip stop loss. 302, 30 pip stop loss. Much better. Obviously, I lose the trade, right? Because this reversed, went back above. But check this out. Remember, you're analyzing off the higher time frame. This is on the daily. Your entry was on that 1 hour, right? Your entry was on that 1 hour over here. Now I got another brick with a wick, right? So my entry is right around here. Now again, I'm not placing my stop loss over there. So I go to that 5-minute time frame. All right. So I'm pretty sure. So here, up there, again, I don't want 140 pip stop loss. My entries here, no more than 2 bricks. So again, I got about a 35 pip stop loss, right? If you want to make it just 30, that's fine. But look at your move to the downside. You're risking about 35 pips, and then you got over a 300 pip move. Right? So that means your entry would have been around 518. You take profit, 486. That's a great trade right there. And notice, I want you guys to notice something. I really want you guys to notice something, right? Notice how here, right? This is more in an alignment than when you would have entered over here. You see, when you would have entered over here based on the 5-minute time frame, look at where your indicators are at. You're already in a downtrend. Price is already oversold. So even looking at this from a smaller time frame perspective, this is a bad area. Whereas where you would have entered in here, look at that. You're just coming off overbought territory, right? You're pretty much now entering your MACD crossover, right? So I got a lot more confidence in this trade. Entry here, stop loss there, 2 bricks above, and then I got all of that to the downside, right? Now again, this is from a smaller time frame perspective on the 1 hour. Obviously this is starting to go back up. This downtrend still hasn't begun, so be careful for all you guys who are really selling and think the sell has begun. I think this is going to shoot up even more, right? You got to understand something. Safe havens are you know, they're the key right now. You got to understand what between the trade talks. For those who have a job, understand there will be a recession within the next, I would say 12, 15 months, maybe 18 months max. Definitely within the next year. I would say a year, 18 months. There will be a recession. We're overdue, right? Plus, we got all this crazy economic stuff going on in the world. So between trade talks, between Brexit, like I said, trade wars, Brexit, you got, you know, unemployment rising, all of that stuff. We got a recession coming. So when recession comes, where do smart money like to place their money? In commodities, gold, silver. And that's why you guys have been seeing a big rush on gold. That's why I've been telling you guys to buy silver since last year. Right? Buy silver since last year. I said that October, November of last year, silver will be the trade of 2019. And so far, silver and gold have been the trade. I've mostly said silver. But if you look at silver, look where it's at now, 16.9, and we were looking at silver when it was at around 13, right? It doesn't seem like a lot. Oh, it only went from $13 to 16, but trading it, it's a lot. That is a lot. All right. So guys, this is a very powerful technique if you utilize it correctly. All right. Very strong. I would study this, back test it. I'll probably do one more third part on Sunday. And then, probably I would say once a month, I would revisit Renko training. I won't do it every 3 months, 4 months, because the last time I did Renko training was back in March. So that's a big time, big gap. So I know for a lot of you guys, it'll take some time to getting used to and everything. But I'm telling you, once you get used to trading on Renkos, it's a big difference. You're going to see your trading game change a lot. So I'll probably do this once a month, do like a two-day, 2-session Renko training just to keep you guys fresh on this so you know how to trade and operate effectively. All right. So we spent about over an hour on this. Let's get to the charts. Let's look at the rest of the pairs for the weeks and see what's cooking. Watch it, right? We're marking up a higher time frame. Not going to do that. Looking at the DXY on Renkos, right? Higher time frame, we're still in this, right, bullish move, and then you probably it's right, and then we're utilizing one of the smaller time frames for our entry. After that, if you want to reduce your risk, you can utilize. I said, guys, please rewatch this video, watch it carefully, listen to what I'm saying, right? Sometimes when you're trying to keep up in the chats, it's hard, right? Because everybody's talking and everything like that. And no, I didn't find a Renko indicator. I was traveling today. I, got off airport, and when I got home, I'm not gonna lie, I knocked out. I needed some rest before tonight's session, but I will find it for you and get that out. But today I was traveling. But no, that's not what I said. I said, please pay attention to what I'm saying. I didn't say the original trade will be on the 1 hour. The trade can be on the 4 hour. The trade can be on the 30 minute, right? We're marking up a higher time frame, right? And then we're utilizing one of the smaller time frames for our entry. After that, if you want to reduce your risk, you can utilize the 15 minute, the 5 minute. All right. And could you do some chart analysis on Renko going forward? Again, it's the same thing, right? So this would be a chart analysis on Renko, right? Now, if you guys all together collectively would like that, then I'll stay on that. One thing I'm not going to do, though, I'm not going to do both. I'm not going to do chart analysis on Renko and candlestick. Then I'd be on this session for like 3-4 hours. I'm not going to spend 3-4 hours, right? This session literally went from, originally 45 minutes to an hour. Now we're pretty much around like 2 hours. So if you guys would like analysis just strictly on Renkos, we can do that. But I'm not going to do Renkos and candlesticks on both. Like, that's a lot. All right? So you're going to have to pick one. But chart analysis on this would be like this, right? Same thing. Like, the patterns and all that stuff is the same. It's the exact same thing, right? You just got to train your eyes to see it. So looking at the DXY on Renkos, right? Higher time frame, we're still in this channel. So I see potentially one more move up, right? Right? There's a good possibility that price can come back up and retest that high. So before you get in it, you would want to wait for a flag, a pullback like that, right? Just like when this went down, you had a flag and then continuation, right? So you probably want to watch this on the 15-minute. Wait for another flag, just like this. See how this gave you a nice flag, right? You had your bullish move up. Right, bullish move and then continuation. So you see how this continued up, and how you would catch a move like this is basically this was your impulse. Bullish impulse, and then you got a bullish flag. Now, same thing here. And again, what I appreciate with Renko's, what makes it a lot easier is knowing when to buy, when to sell. So price came up. Remember, what am I waiting for on my MACD? I'm waiting for it to retest that zero line. I need that zero line retested. And after it gets retested, all I'm waiting for is another crossover to the upside. Why am I waiting for a crossover to the upside? Because again, based on this bullish impulse. That's my impulse. So now I'm getting my flag, pulling back. Boom. So this is one opportunity for me to buy, right? I got a brick pulling up, right? Above my moving average. That's also a good sign. So it came up, but then what happened? Price retested, came back down, so it came up, retested, and then I just wait for the move again, right? Because I'm still inside of this bullish flag. So then I would buy again, right? For those who use like a moving average, that's another confirmation. Wait for it to get above your moving average, wait for it to get above on your MACD, and then boom. As you can see, you got a nice clean buy. Stop loss right below it. High reward, low risk. Makes sense? Entry here, stop loss there. If you want to reduce it, just go to a smaller time frame. Boom. And then that's your move to the upside, right? It's a lot easier to identify your flags, as you can see, right? Same thing here. I got a bullish move up, right? So when this flag was pulling back, clearly I can't see it on this 15-minute time frame. So I would have to go down, right? For every flag that you see on one time frame, you have to go down another time frame to catch it. So this flag right here that I would want to catch, this bullish flag, I have a bullish impulse. Clearly, again, I can't see it retesting the zero line on the 15-minute. So I have to go down to like the 5-minute. Right? So you see, 5-minute. And what it do? Went up, retested. Right? That line must be retested. Retested zero line. Once it retests, now I'm waiting for that crossover again to go back up. Boom. And that was your move to the upside. So even with flag patterns, it's a lot easier with Renko's to know when to buy, when to sell. Right? I'll give you one more example and then moving on. So that's how I would mark up the charts. If you guys do prefer this way of marking up charts, if you want to understand Renko's more, everybody just agree on it, that's fine. But then I'm not marking up on candlesticks. I'm not going to do both. I'm not going to mark up on this and then do candlesticks. Y'all guys are not making me work that hard. Like that's a lot. So see that? See all these flags right here? All right. All right, so this is GJ. This is a nice clean trend here. See all these flags right here? So what you guys don't see is you don't see a retest of that zero line. So now I would need a smaller time frame. If I'm identifying this on the 1 hour, I go to a smaller time frame. So I end up on, let's say, like the 15-minute. And now I'm waiting for it to retest. So you see how it pulled back, retested. And look, I'm waiting for price to make that crossover again before selling. Right? So I wouldn't take this flag. I'd only take the ones that retest that zero line crossover. Right? So I wouldn't take this trade. So I take this trade, I take this trade, right? And it's gonna tell you. It's literally gonna tell you, right? Literally gonna tell you. So there's no point in me selling right here. No point in me selling here, selling here, selling here. It's at that crossover. So that's the beauty with Renkos. It will literally give you the right time to sell, right? Everything in alignment, right? I got multiple confirmations. The bricks is under my moving average. You can change the period if you want. I got my MACD crossover. Everything's in alignment. So this is a trade I would take. This is not a trade because it didn't retest it. Let's go look at all those other markups, right? This was a flag, right? So this is one that I would take. Retested. This is another one I would take. Retested. Right? This is another one I would take. Another one I would take. Right? And you see it every single time. You see it every single time. Boom. See that? See that? So my stop loss, in this case on the 15, it wouldn't go up here, above that brick right there. And then as you can see, a nice move to the downside. All right. All right. So all right, what I'll do is I'll tally up all the votes, right? Can we do let me see if I can do I'm gonna ask support if I can put a poll, not a toll, a poll, and I'm gonna do ask support if they can do a toll, and whichever wins the most. If I need to go with Renkos or candlesticks, always, you know, we're going. What do you think that means for the U.S. economy, guys? That's not a good look when the dollar drops like this. That's not a good look. Every time our dollar was weak like this, guys, you remember 2016, 2017? 2017 was not a good year for us. Economy-wise, no. Right? That means we're in trouble. And then everything against the US dollar rises. That's not good. That's not a strong economy. So if this takes place, that even further, more reasoning as to why our economy is gonna be in some type of recession in the next year. For sure. 100%. Right? For those US 30 lovers, right? What do I have US 30 doing long term? Long term, what is US 30 doing? Look at this. Long term, what is US 30 doing? Long term, US 30 is going to come down. Remember, US 30 represents what? The 30 largest companies in the United States. So if all 30 largest companies in the United States are about to hit a big wall and drop, what do you think that means for our economy? That's not good. That's bad, right? Do I need to take you guys down memory lane, right? What's this? Right? We have an impulse. We have a flag. We have a continuation. We have another flag. What happened after what happened after this flag? What came next? What came next after this flag? What came next after that flag? If I go back to 340 frame, okay, after this flag, what came next? Big sell. Traveling today, big drop.
Got off
in the market.
And when I got
continuation.
home, I'm not gonna lie.
Right? Look at when this continuation happened. Right? This was the last time US 30 was in a big downtrend like this
session.
But long term, what happened in September of 2008? What happened to our economy in 2008? We were in a full-blown recession. This is, a lot of people thought the world was about